Good afternoon. Welcome to the second part on funds transfer pricing. As already mentioned, today we'll be talking about difference between setup of Treasury Department. So Treasury Department can be set up as a service center or as a business center. And there are big differences between both setups. Treasury as a service center is supposed to help or to facilitate the origination of the asset and liabilities on the business, on the balance sheet and through the business centers. However, there are pros and cons driven by each setup. So Treasury as a service center, of course, we know that regulator is not happy to have Treasury set up as the business unit because there is then the tendency to enter into transactions which are maybe increasing profitability, which regulator would be not happy about. Imagine transactions which are not well thought of, which are driven by your expectation of the interest rate curve in the future and can be perceived by the regulators as a betting with the curve settlement in the future or development in the future. This is very important because, as you know, not only regulators, but also the analysts, they tend to favorite the NIM, net interest margin, which is stemming from from business rather than from Treasury. So they discount NIM, which is coming from Treasury Department through enhancement strategies. They want the stable margin, which are stemming from customer banking businesses and through enhancement of the relationship with the customer and franchise and other activities of the bank, which are considered crucial. Meanwhile, Treasury is, as you know, is crucial for the activities of the bank, but is running risk. So every type of earnings will be driven by the risk-return trade-off, which is not always the one which we would like to have any risk and earning on this risk. So also under this setup as a service center, we want to see Treasury acting as a liquidity provider. So as I mentioned in the first video, so we will be providing liquidity to the asset side, we will be gathering liquidity from the liability side, and we will have the central unit which will be responsible for hedging. This, of course, as the central unit and centralization concept could generate potential conflict of interest if we will set it up as the business unit. Also, Treasury, in many cases, owns FTP. So owns the whole FTP process, therefore is providing, inputs to the curve, is updating the curve on the daily basis. It's responsible also for setup of the FTP methodologies. Therefore, it's not good to have, this unit set up as the business unit because, of course, it can be again perceived as the conflict of interest. Imagine. And it would be conflict of interest because imagine Treasury Department, which is set up the methodological aspects of FTP, and at the same time they are gaining and aiming towards higher profitability of the unit itself because it is judged based on the budget allocated to this unit. Of course, then there could be some willingness to, mark up the FTP curve or mark down, driven by its own advantage. So we don't want that. So when we have the Treasury set up as the business center, in my view, it shouldn't there be responsible for FTP. Also, under the Treasury setup as the service center, as under this setup, this will reside within the CFO portfolio. It is quite often seen that modern Treasury reside within CFO portfolios, and we know that CFO shouldn't own any P&L. Because of this CFO finance department role in the management of the balance sheet as the guardians. Do you remember in one of our on my video I was saying about CFO as the guardian of the balance sheet. So there is this triumvirate of guardians of the balance sheet on the daily basis. And definitely we don't want, given that they are looking at the riskiness profile and monitoring, reporting the as the first line, the potential, risks which are there, we don't want this unit to be the profit enhancer. So these are main pros of the, Treasury as the service center. So first of all, let's summarize it. The regulator is happy. The analysts, this is the preferable setup for the external stakeholders, because we want the stable margin which are coming from business banking activity. We have the central unit Treasury acting as the liquidity provider for the all business units. We see it as the central hedging entity. So there is, of course, no conflict of interest. And Treasury owns FTP, owns, the methodological setup of FTP. Therefore, as the service center, it cannot, act towards its own advantage. And this is the more and more common setup. Meanwhile, cons, of course, on the Treasury as the service center, and this is something which I quite often heard during the, different conferences and having a chat with market practitioners. They are this is first of all quite expensive department, because they have usually, different licenses to the ILM system, to the Treasury management system, to Bloomberg's, so market data providers. Quite often they are running the separate hedge accounting system, and maybe in Bloomberg. Therefore, it's quite a lot. They are paying on their cost on the monthly basis. So sometimes I heard this: who should be paying for those, expenses? Maybe they should get some possibility to earn something for their maintenance, because of course Treasury is composed of highly talented professionals. They know where the market is going. They could leverage this knowledge to the benefit of the bank. And this is the main argument under this setup. Who, if not Treasury, can take full advantage of the local market funding, deployment, tactical opportunities? They have knowledge. They have, access to the market data in real time. They have access to the, catch-ups and webinars provided by the counterparties. So therefore, it could be an argument to let them go a bit more and to gain additional income for the bank. And as the cons in this setup, it is said, if they don't have the motivation, if, they are judged on the same basis like the rest of the bank, without any budget objective, of course, it's less for them incentive to optimize funding cost of the bank, to optimize the deployment of the liquidity portfolio at the potential highest return. There is, potentially less argument for the balance sheet optimization. And it could be or could be not true. I don't know. Definitely as a treasurer of the bank, I wouldn't be looking at being incentivized to do my job properly. I will always try to optimize the balance sheet, even if I am set up as the service center. It doesn't matter. As a professional, I want to do my best in order to predict the risk, to manage those risks, and to potentially optimize the balance sheet according to the best opportunities. However, this is one of the arguments which I've heard in the past, which I wanted to share with you. Then, of course, Treasury as the profit center. As the profit center, the pros are that it can take advantage from the positive market development. So we know that the rates will be moving up, will be moving down, and there are some profitability enhancement strategies, which at some point I would like to show you, maybe not on the FTP module, but on the hedging module. And then you will see by yourself that there are a lot of opportunities for Treasury to enhance profitability of the bank. Of course, the more sophisticated approaches, the more complex hedging strategies, the more knowledge, the more sophistication it requires from the people in Treasury. So it's obviously some potential impacts on hedge accounting, on accounting itself, because remember, as already said in one of our webinars, hedge accounting and hedging are married in the life relationship, because of course you cannot do hedging without consideration what will be the impact on hedge accounting, and this is what you can see in the video, in the previous videos. Also, if it does well its job, there could be significant profit, which is driven from Treasury management and hedging and funding and deployment of excess liquidity, potentially structural hedging, modeling of NMDs, modeling of equity. There are possibilities. Of course, as the profit center, you may want to steer this growth of the balance sheet and this profits. Let's see what are the cons. I see the main cons, which is driven by problems with regulator, because of course regulator is not always happy with this kind of setup. You need strong controls in place. You need to convince regulator that you are dealing with potential conflict of interest, that you are dealing with controls which are around the activity, and there is the proper, robust government structure around these policies in place, and the second line review and third line review. There is, a lot more. We expect much more controls in place, systems which we can have, grasp on what's going on within this Treasury department and acting as the business center. And of course, there is also the possibility of being wrong. So as you know, betting against the market could potentially expose the bank to the excessive risks. And therefore, instead of earning money, you will lose money. So this is all from this on this quick session on Treasury as a business center and profit center. And I would like to invite you to the next session on Saturday, when we start going through objective of the FTP one by one. Thank you.